welcome in our next guest, talk more broadly about the markets. Joining us this morning is Eddie Ghabour. He is the owner of Key Advisors Wealth Management. Eddie, thank you for being with us as always. A sea of red to kick off this Tuesday morning. Takeaways on the action we've seen so far this week.
So I think we're going to see a very similar month as we saw in October. In October, we had the VIX spike over 20. We had some names that had a lot of froth in them lose about 20% of their value in 5 trading days. We saw the broader market lose 3 to 5%. And then it got aggressively bought, and we were back at new highs. And I think that's going to continue to be the trend the month of November. One thing I will flag is how concentrated this market is now. We've seen a lot of areas break down, and it's really been a tech-driven rally. So on a day like today, when you see tech take a hit, that's why the broader market looks as bad as it does, because it's how concentrated it is. So I want to see some broadening out, start to pick back up again. But November is just going to be a very choppy month. But again, I think it's an opportunity for those that have missed this rally to start building up positions and get ready for 2026. We think the first quarter of 2026 has an opportunity to be really strong. So any opportunities that you get on dips here this month or maybe next month, to me, are buying opportunities. This bull market is not over.
All right, lots to unpack there. But first, you say you want to see this rally broaden out. Where do you think that we could see leadership shift to next?
Well, tech, in my opinion, is still going to be one of the leaders, just due to the concentration and the weighting that it has in the S&P. But we want to see banks get strong. We want to see small caps pick back up to highs. We want to see housing stabilize. That's been pretty beaten up. Some of the economically sensitive areas have gotten weaker. And I think a lot of that could also be front-running some weaker economic data we may get due to this government shutdown. We do believe these are all just short-term concerns that will ultimately fix themselves and will be back up. But these economically sensitive areas we would like to see stabilize, and that's going to be really healthy for the market. The more participants you have making new highs, the stronger this market will be.
Okay, so if we see that, but you're also saying we're in a buy the dip scenario here. So these red days like we have today, this is a buying opportunity. What gives you the confidence that the bull market is going to continue?
Well, one of the main factors is the liquidity component. I mean, we've never, I shouldn't say never, maybe there was a time, but I can't find a time in history where we had an economy that is scheduled to grow at about 3% GDP, markets at all-time highs, and we have a Fed that's going to start loosening monetary policy. That's like adding fuel to the fire. And regardless of what the macro dynamic looks like short term, you can't fight the Fed. The amount of liquidity they're going to put into this economy, whether you agree with what they're doing or not, is going to be very bullish for risk assets. And I think the market sniffed that out. And the other component is a lot of money managers have underperformed their benchmarks this year. So I think you're going to see what we call a catch-up trade, where they're going to be forced to buy to get their performance numbers up. And this is why we haven't seen more than a 3 to 5% drop since the April bottom that we had in this market. And I think that trend continues through the first quarter next year.
All right, so a little performance chasing potentially adding to our boost. And you mentioned the Fed there. If the Fed does cut this coming up in December here, do you think that this adds another leg higher in the markets, or is it basically already factored in? Because we did get a more hawkish tone from Jerome Powell, and he really said we're on a meeting-by-meeting basis right now because of the shutdown and the lack of data.
I think if they cut in December, that's just going to add more fuel to the bull market. And the other thing they announced that's going to happen in December is the end of QT. And that's just as powerful, if not more powerful, than the rate cuts. So you have the end of QT with rate cuts heading into a quarter where the worst should be behind us in regards to tariff concerns. And I think the growth of the economy is going to accelerate. So it's a real Goldilocks scenario. And in bull markets, you're going to have periods of time where there's doubt in investors' eyes when you have a correction or a dip. But some of these moves, stocks have had 100% moves. So if you're down 10%, that to me is not anything to be concerned with. It's just recalibrating and getting ready for the next leg up.
And Eddie, you just mentioned tariffs. We're expected to get a Supreme Court decision on the Trump tariffs tomorrow. How significant of a ruling do you think that could be in terms of market direction?
I think it's going to be a big decision because the way I look at this is if they rule against the tariffs, I don't think the administration is going to be real happy. So what type of response will they have when the Supreme Court makes their decision? If it doesn't go in their favor, could cause the markets to really get jittery, because markets hate uncertainty. So there's still certain triggers that the administration can still do for some tariffs to continue. But if they rule against it, there will be interesting, because there'll be a lot of money that has to get paid back. And I don't think we've ever seen a time period in history like this where we have such a big ruling from the Supreme Court that has such economic impact. So I expect a lot of volatility if the ruling goes against the Trump administration.
All right, and so let's talk investment strategy here. You said it's a buying the dip opportunity. If we're going to buy the dips, where should people be focused when they are making these plays? Where should we be looking?
So, the Mag 7 is still going to be very critical to the health of this market, just due to their concentration level. One of the names that we like going into 2026 is Apple. We came into the year bearish on Apple, and then we started buying Apple in August. To me, it's a safer way to play the market. It's not as volatile, strong balance sheet, but all the stars are aligning for them with iPhone sales in China, and a China-U.S. trade deal we think really benefits them. So that's a name that we like for our clients based off their risk tolerance. And then we're going to broaden out. We still like small caps that we would buy on the dips. We would buy financials on dips, because if we get what we expect going into this next quarter, you should see a reacceleration. And the one higher risk play, and it's right now looks weak structurally, would be Bitcoin. To us, crypto is the #1 risk asset in bull markets. Now, if that breaks down, it could lead to bigger problems. But right now, with the correction it's had, again, you have to have the right risk tolerance. It's a real interesting setup when you look out 4 months from now, because if this bull market does take another leg up, we would expect crypto to be one of the bigger winners in that area.
Yeah, and taking a look at crypto this morning, we're down on Bitcoin at least to 103,000 new levels we haven't seen in months. Eddie, thank you for being with us to talk macro this morning. That's Eddie Ghabour from Key Advisors Wealth Management.